Hello, girls. I can see people joining us. Can you please say a quick hello? This is Reema, and we are live from the offices of Century Financial. And I have this beautiful Deepa sitting right next to me. Today, we're going to talk about a topic which is very important for us women. And this is the first event with which we are kicking off our celebrations of International Women's Day this week. Very glad to have you on the show, Deepa.
Thank you.
Let me introduce, this session has been powered by Century Financial. Century Financial is a privately owned investor corporation. They are located in Imar Square in downtown. They've been in business for nearly 30 years now, and they are the leading investor services providers in the region. This beautiful, gorgeous lady sitting next to me is Deepa. She's the Deputy Head of Research at Century Financial. She's a CFA, she's a wife, she's a daughter-in-law, and she's a very prudent investor herself. Deepa, also at Century Financial, devises client portfolios, helps them with their strategies, trains the internal teams, and also conducts webinars which are very, very crucial for disseminating knowledge amongst our audience. So, very nice to see all of you here live with us today. Hello, Dipti. Hi, Pooja. Hi, Priyanka. Hi, another Priyanka. We got all the Priyankas here. Hi, Aparajita. This session is very important for us women, and Deepa and I were joking that actually I'm one of our audiences. I have a question before we start off and get into the details. How many of you invest your money today? I know we women are very good at saving, but how many of you actually take financial decisions in your homes today? Can I get a yes or a no, depending on how involved you are in the finances of your home? I'm just waiting to see one or two yeses or nos before we start off. Just to understand. Hey Sonakshi, hi, glad to have you here. I want to really understand, how does IWD manage their finances? So I want to see either a yes or a no, depending on how involved you are. Oh, Pooja says she is involved.
Amazing. Hats off to you.
Amazing. So we have our first question for Deepa here today. Deepa, what is the role of women in today's household, and what are the trends you've seen in your recent researches?
So, I actually take a lot of pride in the fact that women are creating a mark for themselves, across the globe, be it in the corporate world or even as homemakers. Women have actually created a mark for themselves. So that is something I'm really proud about. But one area wherein I feel that we women really need to work forward and need to take more steps is in terms of managing our own finances. So that is one area wherein I feel we're still lacking and we really need to take steps. So what I think and what is really happening is, it's just like, when there's a lot of math, or when there are a lot of numbers involved, or just because it's finance, so we just believe that, that's not our cup of tea, or it's too difficult, or things like that. But honestly, that's not the case. Not at all. So the US Treasury Secretary, that's Janet Yellen. You have the Indian Finance Minister, that's Nirmala Sitharaman.
Yes.
So the big women, when the world is leading, is handing over their finances to women, then why aren't we taking charge of things? So it's very important that in today's day and age, it's not about, in fact, it's not even about men and women out here. It's like each and every individual needs to take charge of their own finances, and they need to invest. And they need to invest in the markets, and most importantly, they need to take charge of their own finances. So I'm glad that I'm a part of this session, and we can talk and take things forward, and we'll discuss how we can invest or how we can manage our own finances.
Amazing. I have my favorite Sonakshi there, and she's saying we really want to know how we can manage our money. So hold on to this session, Sonakshi. We are going to be talking about some of this, absolutely. So I know, most of IWD, most of the women in my community are amazing at savings. Say yes if you love discount codes. We are known for our discount codes. I think we work with all the big brands to have discount codes. We are very diligent savers, but a lot of the women are not big investors. And just like me, in my case, my husband takes care of all the finances. I don't even get involved in it. But why? Why do you think women should be getting involved in it?
So, first to answer this question, so in today's day and age, it's very important that each and every individual, and like I said, it's not about men or women. It's like every person needs to be independent. We are living in an age, 21st century, where everybody, as of today's date, is independent. So when we are independent about all other aspects, then how can money I mean, that's such a big decision in today's date. So how will you not take your own decisions when it comes to where you want to invest? And like you said, women are known for being good savers. They have that instinct, they have that intuition. Then why not put it, even in terms of investments, and grow your money much more? So it's very important. So like you said, women are known for searching for good deals. They can grab a big discount for their buck. And so then it's very important that when you are so good and when you are so talented, why not deploy the same skill in the financial world as well? It's not something, it's not rocket science at all. It's very easy. You just need to, I'll be discussing some tips where you can invest, how you can invest, and how you can participate. But I think in today's world, it's very important that we are all independent. Personally, I come back from India. I've shifted to Dubai. So back home, we are, it's me, my mother, my sister, and my dad. So we're like 3 women in the house and 1 man. But all of us have our separate portfolios. And it's not that, the stocks in the portfolios may be similar, but despite that, we all have our separate portfolios. We're looking at our own finances individually. So this is something I am practicing, and I think it's very important that every woman and everybody, in fact, for that matter, should take charge of their own finances. So, there's a very interesting stat. Women tend to live much more longer. And in terms of work life also, women tend to work a little less than men do.
Absolutely.
So obviously that in itself says that we need to make more money.
Yeah.
And if
absolutely, we all want more money for sure.
So it's important that it's very important that money is doing the work for you, rather than you having to work for money when you're retiring.
That's very interesting.
So it's important that money is working for you.
Yes.
So for that, you need to start investing, and then money will do the job for you.
Absolutely. I think that's very well said, that money has to do the work for you and you are not working for money. And I think all of us would love to be in that position where money is doing the work for us. I'm going to do a quick sound check here. I can see a lot of people watching us. Can you please say a quick hello or a yes? And just tell us you're watching us, you're liking the session, and the sound is completely fine, the video is working fine. Before we move on, so I'm waiting for the first yes to see how, and we'll continue talking on this topic. For those who've just joined us recently, we are live from the offices of FinanSHEly Financial, and I'm joined with my beautiful lady Deepa here, who's the Deputy Head of Research. And we're going to, and this webinar is all focused on being how we can be financially independent, how we can be financially prudent, and make the money work for us. Amazing. So we have Sonakshi. We have Sonakshi saying we all of us in our family always are never dependent on each other, but I'm excited and looking forward to your tips. Amazing.
That's amazing. Yeah, that's amazing.
And Sakshi says hello. Hi Sakshi. Hi Asmita. Thank you. We'll move on to our next question, and I'm going to hold the quote you just said, that we want to make money work for us.
Right.
Now that we've established that being financially independent and being able to invest our money is very important, what are the hassle-free, easy ways that we women can get involved in all of this without making it us a huge new task for us to manage, basically?
That's an amazing question. Plain and simple, basic, no rocket science. The easiest method, I'll get into it, but the easiest and the most simplest way would be to stick to an SIP form of investment. When I say SIP, that is a systematic investment plan. So every month you decide, or every quarter, or every week, or whatever, however it is, you decide a fixed amount of money that you would be investing. We can decide and choose the instrument where we will be investing that money, but that's a fixed amount. So like say $1,000 every month is fixed. You allocate that proportion, and irrespective, and you have to be disciplined about it. So if you have kids, so then you can probably on your kid's birth date. So if it's on the 5th of the month, for example, so every 5th you won't even forget, you have that date decided and it's fixed. So you make that regular investment. Now the question is, okay, we know where to invest, we know we know that we have to do a regular investment, but the next question would be, where are we supposed to invest? So the answer to that will depend on, firstly, there are multiple factors that go into this, that where you're supposed to invest. One would be your time duration. For how long are you willing to invest? When do you need the money back? What are your investment goals? Like what is the kind of return that you're expecting? Depending on all of those parameters, we can answer that. But let's take you have a long-term duration and you want to invest for your kids' education, for example, or you want to invest for your own retirement for the future. So if your goal is say for the next 10-15 years, then in that case an SIP based form of investment, and you can do a great amount of allocation into the equity markets, into the stock markets. Now there are multiple stock markets across the globe, so you'll ask me where should one invest. I don't know if you've heard of, I think many of us must be familiar with Nifty.
Yeah, I know Nifty.
So,
yes.
so just like you have Nifty in India, we have the SPX 500 in the US.
Okay.
So what is SPX 500? It's basically an index which is tracking the 500 largest companies of the United States. So you have an Apple, you have like say Microsoft, you have Netflix, Facebook. These stocks are a part of S&P 500. So when you invest in S&P 500, you're basically investing in these companies, like the companies which have have been the trendsetters. They have changed the way the world has been functioning. So and you don't need to invest in something that you don't understand. For example, we all use an iPhone, right?
Yeah.
I mean, we all use. I mean, I won't say all, but most of us. Many do have an iPhone, or many are wearing an Apple Watch. So when you are investing in these products, then why not become owners of these companies?
Yeah.
For example, we love luxury products. For if you believe in buying an LVMH bag, or if I don't know if you all are aware about SLR products. I mean, they do wonders to your skin. So if we believe in such products, then why don't we become owners of these companies by just buying their shares? So you decide what product you want, and it's not like, I mean, we, for example, Netflix, we browse on Netflix, we watch whatever series we want to watch, and we're using it on a day-to-day basis. So we know how Netflix has been doing over the years. So this is something you can relate with. So you can invest in these stocks. You don't need to invest in something that you can't understand, and it's out of your box. So for example, if you're a Starbucks lover, if you're having coffee, Starbucks has given 26,000% returns since its inception. So I mean, it's amazing. If you would have just invested in Starbucks, and if you would have held till date, so why not? So you need to know. You don't need to just go for something that you don't understand. Something that you can relate with, something that you are investing in it, and then you start investing in that particular product. So another example that comes to my mind would be Amazon.
Yes, I love Amazon.
We
Home
do
delivery.
so
But no
much.
one is doing great. But Amazon is amazing.
Yeah. So if we're shopping so much on Amazon, just back in 2005, Amazon share price was close to $35.
And what
Can you guess the price today?
$350?
Go higher. Come on, go higher.
500?
That's like 350 in itself is 10 times
it's
returns.
10
But I'm
times,
saying
absolutely.
go higher.
I don't know, 3,500? I'll go 100.
Yeah, it's
Is
almost
Wow.
there. It's at
I'm completely
$3,000.
guessing. I have no idea.
So it's close to $3,000. So that's
Yeah.
like 100 times from 2005.
Amazing.
It's 100 times in a period of 15 years. So this is something that we need to do. We need to make money do the work for us. Like money has to multiply itself. That's the power of compounding. So one more interesting fact, Rima, that I would like everybody over here to know and understand is the benefit of investing in dollar-based stocks or dollar-based indices. So when we are investing in India, for example, or for that matter anywhere, say Pakistan or Bangladesh or even European countries, the dollar tends to be much stronger compared to the other counterparts.
Okay.
So I'll give everyone a very basic example. So in Dubai, most of us must be staying on rents. I mean, many people have their own villas these days or things like that, but most of us are staying on rent, for example. So say, and rents have not changed. They're more or less the same in the last 5 years. I have not seen a major jump in my own rent. So
they increased and they came down and then they went up again.
So more or less,
COVID.
It's now back up.
It's
It's at the same level. So say assuming your monthly rental is 10,000 dirhams. I'm just giving an example. So 5 years back, for 10,000 dirhams, we had to, if you were bringing in money from India, for example, that would have costed you 170,000. Okay.
Yeah.
Today, that same rent, your rent has not gone up. You're still paying $10,000, but today you will have to bring in 210,000.
Yeah.
So what has happened is the rupee has depreciated and the dollar has gotten stronger. So you're simply spending 40,000 rupees extra every month for your same rent. Your rent is constant, and this is a very basic example. Be it an iPhone, be it an LVMH bag, everything is in dollar terms.
Yes.
So if you are invested in India, or for that matter even anywhere else across the globe, or on an average, the dollar tends to be the stronger currency, so you're reducing your purchasing power.
Right.
What 1,70,000 could have bought 5 years back, you cannot buy the same. You cannot live in Dubai with the same 1,70,000. You need 2,10,000 to pay the 10,000 dirhams of rent. I don't know if this example has been clear, but you need to consider the rupee depreciation, or for that matter the dollar strength, and accordingly invest in dollar-based products. So that is something.
Absolutely. I agree with that, and I'm going to take one of the audience questions because I know she's waiting for us. Sonakshi says, what do you think about short-term investment is good or long-term investment? And she wanted to get advice on this.
The answer to this will be it would depend on person to person, but in general, if you'll ask me, definitely long-term investments are much better. But again, it depends on the kind of goals that you have, when do you need your money. But in the long run, if you're investing in equities, for example, in the short run, markets can be volatile, so you can face losses, you can face quick profits also. So if you need the money in the next, say, 6 months, then investing all your money in equity markets would be risky. But if you need your money from a long-term perspective, then we've always seen in the long run, equity markets tend to do really well. So if you have a long-term plan in mind, you should be heavily invested in markets. And if you're not, if you're willing to take some amount of risk and everything, if you're very risk averse, if you really don't like taking any amount of risk, then equity allocation should be little. But otherwise, if you really want to fight the inflation, and if you want to ensure that your purchasing power is intact, then we need to focus on long-term investments, and we need to focus on equity markets to a great extent. So yes.
So actually, I hope that answers your questions. And she has long-term means 5 years or 10 years or in the middle. What is the definition of long-term?
So long-term definition would keep changing depending on person to person.
I think it's your risk, your investment, and when you need the money in your personal situation. I guess, right?
Yes.
Yeah. So,
but yes, it would be at least when you say long-term. So many people even consider 1 year as okay. I don't need the money right now, so it's 1 year. But definitely 5 years is something which will be long term. 5 to 10 years is a good time frame for investments. It should be relatively safer. So even gold, for that matter, I think many of us can relate with gold.
We all love gold, right? So you're talking to women out here. I think we all love gold.
Yes. So if you were to go and shop gold at Meena Bazaar or anywhere, gold souk, so you'll have to pay a 5% VAT when you're buying a physical gold.
Yes.
But if you buy gold online, you'll not have to pay. It's as good as you're buying the same gold,
The
but
ETF,
you're
so
saving the 5%. It's kind of an ETF.
Yeah.
But you're even forget if it's not ETF also, you can actually buy gold. You have gold that is traded in the international market. So it's as good as you're buying gold, but it's not physical.
Yeah.
You can't touch it, but the hassles are so much lesser. You don't need to worry about keeping it in the locker. Is it safe? You don't need to pay any making charges. You don't need to pay any VAT, and
Yeah.
you're saving 5% literally. But at the same time, you're invested in gold. So there are many people who who are scared of investing in equity markets.
Yeah.
So if that's your fear, then gold is an investment. The beauty about gold is that gold is quoted in dollars. So that I was talking about the purchasing
Yeah.
power and depreciation concerns. So that won't be in the case of gold. So that is also a good investment. In fact, these days we see a lot of concerns revolving around the Russia-Ukraine crisis.
Yes.
And whenever there is any kind of a crisis or any kind of a war-like situation, gold generally shoots up. So I don't
think
know
that
if people
happened.
have
That
been
happened
tracking.
last Friday, right?
Yes.
The markets,
So-
the equity markets went this,
down,
and gold went
gold
like
went
this.
up.
Yes.
So if you have been, if anyone has been tracking, then gold prices have gone up a lot, and so even for gold, we can stick to SIP based investments, or you can buy gold lump sum or whatever. But that's also available in the international markets. I don't think many people are aware about this, because when you think of gold, you just think of buying it physically.
Yes.
But you have that option of buying it online. So you don't need to think about where to store it. You don't need to pay any VAT, and you can just buy gold online. So that is
And we
another
all love
option.
gold, so girls,
Yeah.
think about it, and you can get in touch with Deepa if you want to talk about it one-to-one.
Right.
I'm going to take one more question here from Prab Simran, and she's asking, what do you think is better, trading or investing?
Again, that's in fact it's a very personal choice.
Yes.
So see, if you think you are a kind of a person who doesn't has the patience to wait long term, and if you're happy with your short term returns, so say you bought an Apple stock, for example, and Apple is up by 5 or 10%, and you're happy with that return, you just want to exit there and there, fine, that would be trading. That's a short term in and out trading. But tomorrow, if you see Apple is again higher, and you invest at the top, and then Apple is down, then you'll end up making losses. But the beauty about this trading is that so say you bought Apple stock at 150, it went up to 160 or 170, and you sold, and then again when it comes down to 150, you buy it again. So you can do multiple entry and exits and keep making money, but it requires a lot of time, effort, diligence, and basically discipline. Trading requires a lot of discipline. So if you have that, then definitely trading, but if not, then you can focus on long-term investments. So that would be your answer.
I hope that answers your question, Prab Simran. Let us know if it doesn't, but I'm hoping that does answer. We are going to take our next question from Aneri. Aneri says, given the current market, what should be our investment strategy?
That's an amazing question, Aneri. So like we were talking about the Russia-Ukraine crisis. So we've seen, like we were mentioning, that the equity markets have dipped a lot. So in the past, whenever we've seen something of this happen, like we've seen many such situations in the past, and it's obviously not a good situation out there. But whenever we've seen something, when there's a fall in the stock markets, this is actually a good entry opportunity because markets have given a dip. There are many stocks which are trading at like 20-30% discount. So this is a very good time to start accumulating and entering the markets from a long-term perspective. In the short term, we can still see some losses. But if you start averaging and start entering right now, because nobody can catch the exact dip, it's not possible. If I were to predict that today is the exact low and markets will go up tomorrow, then I mean, I would be God and we would all be investing and making money just for ourselves. So nobody can exactly predict, but if I were to track what has happened in the past, and if I were to we do our our research and our analysis, so generally we've seen that whenever these dips come in the market, in the long run they turn out to be good investment opportunities. So the SPX 500 is trading like almost at a 15% dip from its recent high. So it's a very good investment opportunity and an entry point. So the ones who are not into markets, I would really suggest take a look at these stocks at these indices and think about investing. It's a very good entry point and an entry opportunity. But again, from a long-term perspective, like if you invest today and you say that tomorrow I need profits, that's not happening. But this is a good opportunity from a 1 year perspective or 2 year perspective. So that is where we need to start focusing.
Amazing. I mean, thank you so much for sharing so many insights. And I guess for people like me, like I'll be honest, girls, I don't invest. My husband takes care of it. I think we just need to go on that journey of trying to learn about where to spend our money, why we should be financially prudent, and how we can start in simple steps. We don't need to complicate the journey, right? You just start in very, very small, simple steps. Like you said, just decide a small amount of money that you're going to put aside for investments for longer term. And start from there, and then you kind of find your way around it, isn't it?
Just a very interesting stat, like you were saying that you don't do your investments. So according to Fidelity Investments, that's one of the biggest US investment firms, wherein they have almost 4 trillion worth assets under their management. So according to them and according to their stats, in the last 10 years, women tend to be better traders than men.
Ooh, we've all got a chance.
So they've in fact made 0.4% returns more than their male counterparts annually.
Yes.
And the reason behind that, because women are much more organized.
Yes.
They don't have that much greed, in fact, compared to men. Those were the actual stats and the finding.
I think.
So men tend to trade much more in and out, and in the process you end up losing. But women are much more organized, and like I said, that's an inbuilt talent in us that we're known to save, and we're known to be a little more organized and disciplined, and that is what helps us in fact make more money.
Right.
So I take a lot of pride in this fact.
That's amazing.
So yes, I think it's time that we all women start managing our own finances and take charge of things. And if you need any kind of help, we are always available. In fact, we conduct regular seminars at FinanSHEly Financial. It's on a weekly basis or every 15 days. So any help that is required, or any terms and terminologies that you don't understand with regards to the financial markets, we are available. So you can always reach out to us.
We've got 2 comments here. Diya says very true, and Jyoti is saying it's high time we take the reins in our hands.
True.
I'm just going to hold on for 1 minute, and if anybody has any last questions for our beautiful guest here, Deepa, please feel free to ask. If not, just Deepa, as a any closing remarks that you have, and how can women in our community reach out to you in case they are interested in more detailed discussions or more one-to-one personal suggestions, essentially.
So I would just like to add one last thing. I don't think we discussed this, but it's the benefit and the power of compounding. That's multifold. We don't tend to realize, but if you invest your money regularly, in the long run, that really tends up to be a big lump sum amount. If I were to, we even give an example of SPX and Nifty. If I were to just do a comparison between the 2 markets, so 2008, I think everybody was aware that was a year of financial crisis, and we had recession and things like that. So considering from the year 2008 you started investing in markets, for example, so if you would have invested $25,000, that's close to 10 lakhs in rupee terms, in Nifty, and if you would have invested the same amount in SPX, and that's it, and done nothing, just left it there and there, if you would have done that, so what you would have invested in Nifty, it would have grown up to, so 25,000 would have been $33,000 as of today's date.
Okay.
But that same amount, if you would have invested in SPX 500, would have been close to $70,000. In fact, $75,000.
Wow.
So, the both of them, Nifty as well as SPX, have offered close to similar. The returns have not been that different. For example, SPX has offered 190% returns, and Nifty has offered 165% returns during this period. So the difference is not that much, but it's because of the dollar strength that the difference is so huge. In one, you are making 33, whereas the other hand, you have almost $70,000. So that is why we see such a big difference, and which is why we need to start investing in US markets or dollar-based investments. Any be it gold, or there are multiple commodities, multiple areas where we can invest, and depending upon your requirements, we can actually devise a portfolio where you need to invest, how you need to invest. We can work that out. So in fact, so that is possible. That is not an issue at all. But I guess it's time we all take charge, and we all need to start realizing the benefits of power of compounding. And like I said in the start, we need to ensure that money is doing the work for us by the time we retire.
Absolutely, that's the statement which is it for me. Let money do the work for you.
Asmita,
yes. Arpita says, my dear friend Arpita says, thank you for the useful information. Thank you, Arpita. And Asmita has said, hi Deepa, since I have many queries about my investments, how do I sign up for expert advices?
Right. We like I said, we do webinars on a regular basis. In fact, tomorrow we have one webinar happening because it's International Women's Day. So we have one webinar, and I would love to see you all there. We'll be discussing in details about different stocks, or how you can invest in the markets, how you can participate in the markets. So I would really appreciate if you all join in over there. And at FinanSHEly Financial, we always say this thing that you are independent, but you're never alone. So come be a part of our sessions, and we can just help you understand the markets better, and understand the financial aspects about and you can take care and charge of your investments. So I'm looking forward to seeing you all there tomorrow. I hope Asmita, you'll be there.
Yes, absolutely. And I'm going to share the link of the website as well as the link to sign up for the webinar on the top of this live after this session. We have one last question from Dia. So Dia says, I missed it from the starting, but what is the minimum amount we can invest?
So again, that is a very personal thing to decide and consider, but at least if you're starting, it should be close to $5,000 to $10,000. That should be your upfront. Your minimum investment, and then you can decide $500 or $1,000 every month or every quarter, however you want to go forward. But that should be your minimum investment in the start. But again, that is something that will depend upon the kind of goals that you have, and what are you looking for, what kind of returns are you looking for. So what is your final net value that you're looking for in the future. Based on that, we can say what should be your minimum amount of investment. But easily you should have at least $10,000 that you are targeting upfront.
Okay, but on a monthly basis, let's say I'm a housewife and I save about, let's say, $500 every month. Is that doable? Can I just come in and tell you I have $500 per month and please make a plan for me?
Yeah, that's perfectly doable. So that's what I'm saying. We need to focus on SIP based investments. So if you have $500 every month, we go ahead with $500 every month. And the beauty about financial markets is that you can invest in fragments, and you don't need to buy entirely one full unit of something. So you can always start with $500, and then gradually we can increase it further.
Amazing. We have Dia says, thank you. Dia, I hope we answered your question. Radhika saying, given the risks in equity markets as analysts are arguing, what are the alternatives we can consider? Where else can we invest?
All right. So one of the like I was mentioning, and like we discussed, the best assets when equity market is falling generally tends to be gold. And that does amazingly well. Apart from that, even if you don't want to invest in gold, you even can just invest in dollar. You can even just buy a dollar for that matter. So because of these crises, dollar is also considered as the safe haven currency. So whenever when you see there's a war happening or things like that, or when there is no when there's a lot of uncertainty happening across the globe, at that point in time also we consider the dollar. I mean, United States is the most powerful country in the world, so obviously their currency is also the strongest, so that tends to do well in times of crisis like these. So you have gold as an option, you have dollar as an option. Oil prices have gone up drastically. I don't know if you are driving, then most of them would know.
Yeah.
Petrol prices
This month, I saw queues outside petrol stations.
So whenever we have a war or situations like this happening, there are multiple investment opportunities that we come across, and then we accordingly advise our clients as to this is a good opportunity to invest at this point in time. So as and when the situation changes, we'll have different areas to invest in. But if you're really scared about equity markets, then gold and dollar, and there are other safe stocks also that are available that can be considered. So options are plenty. That is not a problem at all.
Great. I hope that answers your question, Radhika. She has another one. Can you discuss the concerns around stagflation?
Okay. So we can really talk about this, but the point is it could get a little heavy for others in this session. But I'll still just touch base upon the same. So stagflation is something that is related to a situation wherein the economy is not growing, but inflation is growing multifold. Inflation is rising and the economy is not doing well, or it is stagnant, and that's why the term stagflation. So what happens is that when inflation is really increasing and skyrocketing, one instrument that again tends to do well is gold. So gold is considered as a hedge against inflation. That's its,
gold is the best, I can say safely, and we all girls love gold.
So that is the definition of gold. So yes, during crisis and during when inflation is going up a lot, gold tends to do well. So if there are these concerns that you have around stagflation, then you can consider gold as an investment option.
Lovely. Sounds great. I'm going to thank you so much for your time, Deepa. I think we had an amazing session. For all those who joined us late, this was a session from the offices of FinanSHEly Financial with the Deputy Head of Research, Deepa, here joining me. We kicked off our International Women's Day because it's the big day tomorrow. So we kicked off this week with a very positive session and informative session on how we women can become financially independent. I'm going to share the links to FinanSHEly Financial and the link to sign up for Deepa's webinar, which is tomorrow, at the top of this live. So if you have any questions, I think investment is a very personal decision for everybody, right? So everybody's situation is different. So it's better you take a one-to-one consultation based on what your personal situation is and what your goals for savings are, because then the plan can be tailored to it. So feel free to reach out to the team of FinanSHEly Financial and Deepa in case you're interested in further details. Thank you so much for your time, IWD. We both had a great time chatting to all of you. I hope you enjoyed the session and had a great time. Thank you.
Lovely talking to all of you. Thank you so much.
My pleasure.